Hello and good evening to Mint Money Conversation. In this webinar series, we try and decode some important money questions that you may have in light of the pandemic and the new normal that we live in. When it comes to managing money efficiently, the first product that you should have is a health insurance policy. Health insurance covers for your hospital bills, and given the rising medical cost, a good health insurance policy is what will keep you from spiraling downward in your financial health. Despite the fact that it's a very important product, retail penetration of health insurance is just about 10% of the population. But that should change with this pandemic and the recent regulatory reforms that have taken place. To discuss some of these changes and to sort of look forward to look at what we can expect in this product space, and also to give you some handy tips on how to build a cost-effective health insurance portfolio, we have in this panel discussion Dr. Bhabatosh Mishra, Director, Claims, Underwriting and Products at Max Bupa.
Hi everyone. Good evening.
Hi, Bhabatosh.
Hi Deepti.
Then we have Himanshu Walia, Joint Executive Director, Star Health and Allied Services. Hi, Himanshu.
Hi, good evening, everyone. Hi, good evening, Deepti.
Then we have K Rath, Senior Vice President and Business Head Bancassurance at DBS Bank.
Good evening, everyone. Hi, Diti.
Hi, Rath. Then we have Rajagopal Rudraraju, Senior Vice President and Product Head, Health and Health Claims at Tata AIG.
Hi, Deepti. Hi, everyone.
Hi, Rajagopal.
Hi.
And finally, we have Sanjay Datta, Chief Underwriting and Claims at ICICI Lombard.
Hi, Deepti.
Welcome,
Hi, everyone.
Welcome, panelists. My name is Deepti Bhaskaran, and I'm moderating the discussion today along with Tinish Bhasin. Okay, we're going to start the discussion. Health insurance premiums have seen a very impressive growth in the past 6 months. Clearly, pandemic has got people to buy health insurance. There is traction in health insurance. I would like each one of you to sort of take us through the trends that are emerging in terms of what kind of products are people buying. Are they buying your or standard corona cover? What kind of covers are they buying? What is the sum insured? Is it the regular 2-3 lakh, or they're going for 5-10? What's the demography? So if you could just sort of take us through the trends, and I'm going to start with Sanjay.
The awareness has actually gone through the roof in the sense that the age groups. We have two types of, when you are in an under-penetrated market, you have two types of population. The population who really feels the need to take health insurance. Typically they are at an older kind of age, and most probably they would be seeing the effects of health risk, and in terms of either their own or someone in their family. But the other larger population do not believe in the fact that they will be struck with certain things at a very early stage, and they're pretty much someone who don't plan for their health. And so that's the segment which has got changed. The segment which did not believe in the morbidity risk or health risk in a big way have started understanding this is something which is can hit them fast. The other important, I think, awareness is how fast it is spread, and that it can affect each one of us personally. It never happened before in infectious diseases. We've seen cases where somebody had an infectious disease or even any other kind of disease. You would tend to believe that it would not, come and hit me, in the family very soon. So this particular consciousness has kind of changed, the thought process. So, we as insurers, of course, in that sense, have really caught this trend, and I think both for us as a company and the industry, each one of us have looked at the particular the need for upscaling our products and distribution. The regulators looked at it in various ways, and the most important thing is that we've kind of gotten our arm around the fact that the pandemic is an issue which we need to make sure that we give full coverage to our insureds, and also at the same time, scale up coverage, which is not something which we easily do in other products. So we normally don't sell, flood insurance in the area which is affected by flood, or sell fire insurance in the building which is affected by fire. So to that extent, we've been opposite. We have gone out and made a pledge that we are here to take care of the pandemic, in some ways provide relief to people who do not have insurance, or who have insurance but to big changes. If we can take insurance for a short term also, or even though it's a long term risk, the underlying risk is a long term risk. Unlike travel, which is a short term underlying risk, this is a long term risk. And still, we've said that for certain periods, people just want to tide over it. We'll make products available. And the regulator has also forced all of us to come out and launch products which would suit this trend. So those are my opening remarks. Of course, I would like others to.
Sure. Himanshu, want to go next?
Yeah, so Dipti, I completely agree with what Sanjay just mentioned. The ongoing pandemic definitely, has created heightened awareness about the health insurance in the country. And if you look at the industry numbers also, by first half of FY 2021, the retail health segment has grown by 34%. So the biggest beneficiaries clearly are the private players in the SAHI insurance companies. So currently I agree, as you mentioned, that the penetration rates are low. But what we are witnessing because of this pandemic is that people from all walks of life are coming forward to buy health insurance. Most of them are first-time buyers, and even a large chunk of population, which is existing set of policyholders, are also opting for higher sum insurance. And another relevant point I would like to mention here is that a lot of young customers are
Right.
signing up for insurance.
Yeah, Himanshu, you know what? Star Health actually has very impressive coverage even in smaller towns and cities. Why don't you sort of tell us a bit about the demography? I mean, is it the very young who are buying, and what products are they buying? Are they picking up the standard Corona coverage policies, or they're looking at the entire portfolio? I mean, how are they what's the purchase like?
Yeah, so all age across, we are seeing that trend. People from young people are signing up. Even geographically also, we are witnessing a very strong trend in the sense that the demand is not just confined to the metros. Even people from tier 1, tier 2, tier 3, and even from rural markets are signing up for health insurance. And it is just not about one specific product. I think a lot of traction seen in the COVID specific plans also. I think the regulator took a right move, where affordability was a concern by launching this COVID specific plans. And I think industry has responded really well. And all the insurers came up with that COVID specific plan to ensure that everyone where affordability was a concern were covered during this pandemic.
Okay, Mr. Rath, you want to go next?
Yeah, so very interesting. In fact, I would like to give a perspective from a consumer standpoint, being a distributor, right? So, one has to understand from the perspective of that the awareness of health insurance, of course, have gone up because of COVID-19. But simultaneously, one has to understand the fact the complexity of the products that are available in the market with the product variants that is available in the market, the complexity of understanding the terms and conditions of the product in terms of exclusion clauses that applies, or the digital purchase journey which has limitation in terms of having a limited sum assured kind of offering to customers, have not motivated the consumers to go for more full-fledged comprehensive health insurance policies during this COVID period of time. That's a perspective that we felt it ourselves. We were the first bank kind of launched the COVID-19 specific product in the country. In fact, we co-created this product with our insurance partner, and we're the first to launch very standardized COVID indemnity kind of product, and that has actually taken up a rise of number of policies that we used to sell through our digibank app. The number of policies that we sold in a normal comprehensive plan compared to what we were selling our COVID-19 specific product is about 20 times more. And that clearly emphasized the fact that customers well understand the fact that they require a health insurance policy. but they're confused at this point of time that which one to buy and how to buy, what platforms to be used, if there are medicals to be called and how the medicals will be done, what is the amount of sum assured should I go for, what variant of the product that I should buy, the digital platform that is currently available with me, it doesn't provide the entire information that I actually looked at. So these all questions keeps on coming in the mind of the customer, and we got a lot of customer queries towards that, and we kept
So they're
on
largely
advising.
buying. So they're largely buying COVID products. Then they're largely buying
Absolutely.
COVID
Uh,
insurance products. Okay.
absolutely. Yeah, yeah,
Great.
yeah.
Rajagopal, do you want to just sort of bring in your perspective on this? Are you experiencing
No, I
something
agree.
similar?
So in our case, we are not doing much on the COVID product. We are growing very fast in retail, but majority is the traditional indemnity products. Only one thing I wanted to add to the discussion saying that fine, customers are buying, but there's a reactionary purchase. It's important to keep these customers going forward. So whether it's a pull or a push, you'll get to know once the pandemic is over. If those people remain in the portfolio, means it's created awareness and it made a long-term shift in the way customers buy. If a lot of these people drop out, then we would have failed. It's a reactionary purchase and it's not made much of a dent. Yes, we're seeing much more demand, but it'll be interesting to see how many people remain in the book, let's say 1 year pandemic.
Yeah, I think that's a very good point about retention and the fact that largely people are buying COVID products because that's the immediate fear. Bhabatosh, what's your experience been like? Is it largely COVID products? What are the trends emerging?
So I would take it in 3 points, Deepti, if I may. One is there is a scare-led purchase, and this comes from triggers. We have classically known over decades that there are things that trigger a purchase of a health insurance, whether it is a birth of a baby, somebody falling sick in family, relatives, friends, uh, change of job, marriage, etc. We know these triggers, and pandemic is a huge trigger. Now, having said that, that led to a massive purchase, possibly initially. I remember COVID product was not available from day one. So initial purchase growth came from this massive scare associated with COVID, and people in hordes bought product when the cases was not even not even 50,000. But if you look at the trend more recently, that purchase behavior is coming down gradually. And then came a COVID product, added a lot of retail lives. When there is a massive scare and you offer what addresses that scare specifically, naturally there will be a huge adoption. Now, how much of a scare results in an awareness? You have addressed that. Raj spoke about it. How much of a renewal migration from a COVID product to a standard product happens? That's something we will wait to see. I personally feel there will be a new high, but certainly the level of growth that we have seen because of the scare is not sustainable. The second point I would say is, from a trend point of view, I've seen these two categories. Now, once the trigger goes away, then procrastination takes over. I believe, and I have reasons to say so, that the need of health insurance today in a larger mass is established. If you check with people, the need of health insurance existed even before COVID, right? But procrastination was as much equivalent and a stronger force. Now, this trigger phase, whoever purchases a standard purchases it. If you let go of a while, again, the same procrastination of this will take over whatever awareness is built.
Yeah. Okay. I'm going to take off from what Mr. Raj said about customers still confused in terms of benefits and how the policies are. We do know that health insurance policy is a complicated product to understand, especially if you don't understand medicine or you don't understand medical terminologies. But insurance of late, the regulator has focused a lot on standardizing and rationalizing exclusion in a regular indemnity product. So, from that perspective, do you see, are you hopeful, that there will be a migration you will be able to retain from that light? And also, when I still look at a retail health insurance policy, it's nowhere near what, let's say, a group cover could offer, or let's say a PMJ offers, which does not have very many exclusions. Even the PEDs are covered. So, if I look at a PMJ and if I look at a retail health, the gap is still huge. So just wanted your opinion on why is that the case. Maybe Sanjay, I should ask you. And in answering that, you should probably take us through some of the big changes that have happened in health insurance that has made health insurance customer friendly, and then address the gap.
Yeah, absolutely. I think that's a very good question, in terms of the gaps. But I think we need to understand the context of how PMJ was kind of positioned and what it does to a section of the population, and what it brings to the table versus products which are sold, in the market, who have been selling on a usual basis, and which where it's led by, like, everyone in the panel articulated, a lot of the push is required to bring out the whole, take out the procrastination part, and that requires a huge amount of selling and pushing, but the underlying issues, and let's come to that, and then we come back to the procrastination issue, which is not there in PMJ. The entire population is covered in one go. Here we have to do selling, and in the selling process there are risks involved, also, which you have to take care of. But amongst the risks, there is something which is known as trust. Actually, there is an underlying factor of trust. Correct. And so that is where product complication comes in. What do we get, what we don't get, and how these particular things like pre-existing and all will play out. So to look at that paradigm, we need to look at the fact that health insurance has grown, in a huge manner, in terms of non-PMJ health insurance, grown exponentially over the years. It's CAGR of 20%. It's not something, which has come just because, there has been a sequence of things which have happened from the perspective of improving the whole, playground, and all of the players who are currently in it have contributed to it along with the regulator, the customer, and I would also add the media also to that, because they also enlighten the customers in a lot of ways, and which is made that particular trust to take place. But one fundamental fact remains that if we are a industry, let's just take 1 year back, and we are paying 16 crore claims, and we are we have a, let's say, we'll be taking a premium. Let's say last year we took in premium 51,000 crores. Out of that, we are paying around, let's say, 40,000 crores as payments happening. That particular ratio has been there for a very long time in terms of what we take as premium and what we pay out as claims. It's been pretty high, and that is in spite of all the the issues around payability, non-payability. So it started working. It has started working in a big manner. A lot of people have taken it up, and it's just kind of flowing through. Two principal reasons which have led to it is a lot of the standardization, and the fact that also in terms of innovations in covers which have come in, which is also very important. There it has built trust in terms of innovations covers. Taking small examples, like the definition of pre-existing getting kind of very standardized. The players also are getting have over the years kind of become very focused on providing customer service, and innovation on servicing and particular products. All the products have undergone changes. There's been a lot of specialized products which caters to various new segments. So, all in all, there has been a huge growth. So we can't deny that fact. But what we must really understand that this process of selling retail health insurance has an underlying risk, as I talked about. Underlying risk is that I have to make it sustainable. And there is one simple thing which is not there in PMJ, which is there in EA, is called lifetime renewability. So as long as the product and the players and the funds is sustainable over the long run, a customer has access to his health insurance policy for a lifetime. In PMJ, it is all dependent on funding of the government, and while it is in one shot, it's very easy, it's simple, all of that. But tomorrow the government stopped the product. Let's say the earlier government products like RSB and all that were stopped. They got stopped. So then the people who were there were back into the whole situation of fending for themselves. And if you want a demand-led, healthcare sector which is funded by a pre-planned insurance cover, there's nothing like retail health insurance. And there is no other industry, which covers lifetime renewability in a regulated manner as long as the product is sustainable. So those are my opening remarks. I'm sure other contributors would like to.
Himanshu, do you want to just jump in and give your opinion on this whole gap that we see in retail health insurance vis-a-vis the group or the government insurance schemes?
Yeah, sure, Dipti. So, my take on this is that, the PMJY policy, which is there, first of all, let us understand what's the objective. It's a great move by Government of India, but what we need to understand is that, this particular policy, the objective is to provide, health insurance to economically vulnerable Indians, where affordability is a concern, right? And it's not fair to compare the Ayushman with a normal retail policy. So Ayushman is a mass health insurance scheme that provides cover on the named ailments, including PED, but largely targeted towards people those where the affordabilities are concerned. And then what happens in a large mass scale policy is that when such covers are provided to crores of people, the advantage is on the spread of risk, and insurance operates on the concept of large numbers. And whereas in the case of retail policy, it's on a voluntarily basis. The individual chooses to take a policy, and normally retail policies will come with a waiting period. And it is also important for us to inform the customers in detail about the coverages, exclusions, terms and conditions, etc. So that's my take on this. I don't think that it would be fair to compare a retail policy with a government-funded scheme.
But what about group policies? I mean, group policies, and I'm talking about commercial group policies. They seem to have a wider coverage compared to retail. So, would you then say that even that comparison may be unfair, or is that a valid comparison to make?
Again, Dipti, my stand would be, then the numbers which you get in one shot is much higher than what you expect in retail.
Okay. Okay. So largely what I'm hearing is that when it comes to retail, it's sort of a push product. There isn't enough scale in retail to sort of, to sort of narrow the gap. Also, when you're underwriting, you have to bring in certain caveats to protect yourself, because you're also interacting in an environment which is unregulated, which is the healthcare ecosystem. Given all this and the fact that if health insurance has to become popular, as what Mr. Rath had said, that you need a policy to be very simple in terms of exclusions and coverage. Clearly there is still a long way to go in terms of health insurance development. Given all this, what are the external factors that will need to change? Now, external could be whether the way you look at onboarding, the way you look at pricing, the way you look at healthcare ecosystem. But maybe give us a sense of what are the external factors that should change. Rajagopal, do you have a view on this?
Actually, I would take the earlier question on group retail. My own perspective of retail specifically. Actually, if you look at retail product when privatization started, effectively there's one retail product, Mediclaim, all insurance sold, standard exclusion, same cover, same premium. Over time, actually, we would pull the product the other way. We added more exclusions, more coverages, more complex conditions. A lot of it is reaction to claim ratios, larger claims from providers, because we couldn't control the providers the way they were charging. It was easier to put more restrictions on the product. So people entered disco pays, room rent restrictions, proportionate deductions. Over time, actually, pull the product the other way. In the last few years, partly regulatory, partly some of the standalone companies, private companies, are again making the products much more liberal, and it's a curve if you see that way. Now, at least the exclusions are standardized, covers are still wider. People are buying larger covers. That's on the retail space. So yes, retail product is now looking simple, but it was simple when it started. It's just that in the middle phase, somehow we, as a reaction to the way providers are behaving, now I think insurers are dealing with providers and not through policies. So you need to engage with providers, tariffs, discounts, rate agreement. That's where you need to control. You don't have to put all the controls in the policy. So you shift things often to the providers. In terms of group coverage, I do agree maternity would be covered, waiting periods won't be there. But on average, if 100 rupees is claimed, today in private companies, the retail customer will get more paid than in a corporate policy. Because corporate policies over time, because corporates want to control the payout, actually have put more payout restriction. Coverage could be like maternity is covered, but limit would be 50,000 or the other restrictions. So the out of pocket in a corporate policy, in my, at least in the examples I see, actually are higher than the retail policy. Max Superstar, Tata AIG, any private in the ICICI Lombard, a retail customer could get, let's say, 90 or plus % of the 100 rupees claims. In corporate, much lower.
Okay, that's a
Third,
very interesting fact. Yeah, tell me.
at least in private companies, that would be my assessment. And group, very few group, because control costs, they are introducing restrictions. They charge from the employees part of the premium. So it's not, corporate book seems easy. It's not that simple. On the government scheme, specifically on Ayushman or something, see, end of the day, they're listed surgical cover effectively. And government, through various policy initiatives, control payout. As Sanjay sir said, do they continue, don't they continue? They also, it's not about continue, they also change rules of the game in between. So they said something can be done in private, they change it to public sector if they see payouts. So that retail is still the best business for the customer in the sense to participate. It's more difficult business to do. It's lifetime, it's more risk. So to be very careful of risk selection. So to do right risk selection, manage providers well, then you can ease the policy a little. If you're not doing that, all the restrictions end up in the policy and not as at acceptance or so it's a balance. The restriction on the policy will reflect what you're doing at entry. So if you have
That's
very
right.
strict entry, then you tend to have a more liberal policy and it'll work out that way. So the products, you can't generalize saying one is better than the other. If I'm a customer buying, I'm better off buying a retail product, but I'll get more speed. The fact, let's say there's initial PED or something waiting period, I'm more likely to get a larger portion of my claim in a private product than in an employer-employer. RSB, Ayushman anyway are fixed payouts, right? So providers are restricted. There's no out-of-network payment. So actually, it's more restrictive than.
Okay.
In terms of
Okay.
external factors, I think the good part which we are seeing now is, a lot of people are pessimistic and very optimistic. There's much more engagement with providers now than, let's say, 20 years back, 10 years back, 5 years back. Might seem like a
Okay.
lot of haggling, it might seem a lot of pushing and pulling, but that's the right thing. At least you're engaging with the right party. They are providers of the service, we're payers of the service. So we need to ensure together that the customer doesn't suffer because of the complexity of the product. We're not going to make health insurance any less complicated. What we can do is it's uncomplicated for the customer, and all the
Sure.
complexity is resolved by us and the hospital. If you can
Sure.
create that structure, the complexification goes away.
Got it. Bhabatosh, I want your opinion now. We were talking about these external factors that you need to address in order to widen the coverage and, sort of remove the exclusions that we have right now in retail products. So, given the fact that health insurance doesn't operate by itself, you are actually paying bills. You're paying hospital bills, which is an unregulated entity. There are other external factors as well, which is why insurers have built-in exclusions and caveats and all of that. In order to make health insurance more comprehensive, what are the external factors that should change? Do you have a view on that?
So the single most important one is what you mentioned. Personally, I know of only two products which are not consumed either in the manufacturer's space or the buyer's space. Everything else is either consumed in one of their spaces. One is motor insurance, the other is health insurance, where the consumption happens in a third party space, which is either a garage or a hospital. And that's why health insurance becomes a very, very, additionally complex subject. One, the third party space is a hospital. Healthcare itself is an extremely complex ecosystem. It's a complex subject. There is a tremendous information asymmetry between a hospital, a healthcare, the healthcare providers, and the consumer. And it is also true there is a information asymmetry between the healthcare provider and even the insurers, because insurers inherently are not as invested into understanding medicine as a healthcare provider is. That makes the whole subject complex. And the second level of complexity is added on top of health is the whole policy wordings, terms, condition, whether regulated, standardized, non-standardized. It's at the end of the day, what has been done is standardized and not simplified. So what we are saying is we have made it consistent and standard, but we are not saying it is simple at any point, right? If you read through the standards also, it's fairly complex at that level. So there are two levels of complexity associated. Now, any simplification in any of these actually is a big imperative to, augur growth. Either we
Okay.
make the policy terms and conditions simple. If I take a wild and bad examples, always make the case better is if I could bring out a policy and say that every healthcare expense is payable under my policy, no exclusion, no waiting period, nothing. That makes it very simple. Customer don't have to bother about what healthcare is accessed. Or I make the healthcare side simpler. Uh, it may be restrictive or not, but I say any surgery that you do is covered, right? Then also it becomes simpler. And these are important external environment things from a healthcare point of view that is very, very important. Now, healthcare is not just complex as a subject to understand, but it is a prerequisite for health insurance. No financing works when access is not there at all, right? And in that sense, it is complex and evolving. Every 6 months, 1 year, the newer procedures, newer drugs, and newer equipment that come in continue to add a level of complexity. Right
That's right.
now, evolution doesn't mean it is simple, and every new introduction of this nature brings in substantial level of complexity because now the choice architecture available to the customer and how it is exercised become. Let me give you an example, and this is some year back. A new technology called cyber knife got introduced. From a hospital's point of view, it is a regular, attempt that modern and more comprehensive and more complex care at the same level is brought to the consumer, which is a patient in that case, right? But because it is complex, one is to understand is it indicated or not, and this whole subject about indication is a very, very complex subject, right? And there goes the simplicity and clarity, whatever standardization you do, unless that is made simple. Example of that simplification would be public funded schemes like NHS and most of Europe would have somebody who does it for them,
What
which
about
does
India?
and
I think IRDA did recommend in their. I remember there was a health insurance report recently, as recent as 2018, on the basis of which these regulations have come. They had recommended an HTA, Health Technology Assessment Committee. What's happening to that committee? Are we seeing any light on that front?
I don't know, is there something happening, first of all, but I am also aware that the Ministry of Health created a Department of Health Research, a sub-department within it, which actually published a few, position statement equivalents, assessing few procedures and diagnoses. But I don't think it has moved in the direction and at a speed that was desired. I don't think a health technology assessment committee has been constituted as yet. That was a positive, step towards the positive direction, right? So that external environment is largely healthcare delivery system. The second is we are introducing more and more facility, which is making it more and more complex as well. For example, let me refer to wellness. Now we have introduced wellness as a geography into health insurance without actually defining what wellness is. Right. So these are elements that continue to evolve, adding layers of complexity. Some of these are actually work in a definitional element first before introduction of a benefit coverage or guidelines or regulations around that. So these are some external environments, and external I'm treating as anything beyond the health insurance companies who do business in health insurance, whether GI or health specific, right? So these are certain things that are very, very important.
Okay.
In fact, I have a question talking about external factors. Um, when COVID happened, we saw a lot of horror stories that came out of it. There were hospital inflating the bills, and there were cases when hospitals also said that they won't cover any cashless treatment. Uh, so for the insured, it was a huge out-of-pocket expense, despite having an insurance policy. So just wanted to understand that there are these leakages, and given the entire health ecosystem, what do you guys think? How should the government or the regulator should now look at health insurance? in fact, was a disease specific COVID covered the answer to, uh, you know, uh, such situation, or should they have done things differently? Maybe we can start uh, from Mr. Rath, being a distributor, what he thinks about uh, the industry.
So, before answering this question, I would like to answer the previous question that Dipti has actually asked on the external factors that would help in terms of growing this industry. So, obviously, there is an incentive that is paid tax incentive which is given to customers right now in terms of paying the premium, and that should continue because that's a good step that government has actually taken. The other fact that I wanted to make everyone to understand a bit differently here is that today in the connected world, can we look at something which is a technology evolved information sharing methodology where the information is shared across the globe, maybe a blockchain kind of technology where the information, the medical reports, repositories are kept in that blockchain, where insurance companies can pull out those informations for the underwriting and claims. Similarly, the behavioral aspect that the customer works, for example, using a smart device for the wellness things that the customer do, all those data are captured in that globe, and obviously that can be pulled out for doing your underwriting and arriving at a premium is something which wanted to think a little differently than restricting our thoughts to only what regulator is coming perspective in terms of how they simplifying the exclusion clauses, or maybe from an underwriting risk standpoint, there are risks which you have to underwrite. So we have to look from a different standpoint altogether from a consumer thought process. Yeah. So that's on one side. The other question that I have towards in terms of hospitals not actually going and accepting the claims and so on. So, for you to understand one thing, that when this particular pandemic came into India, there were confusions across the mind of consumers whether pandemic is covered in the comprehensive health policy or not. Subsequently, regulator clarified that yes, pandemic is actually covered. Then there are further clarification that was given around the claim processing and so on and so forth. These were not clarified by the insurers to the customer. Had there had been proactive measures been taken by the insurers to communicate the customers through the distributors or directly, I think that would have helped the customers in lot in terms of taking up what steps to be required in terms of going at the time of hospitalization. Yeah.
Okay. But any thoughts in terms of whether the regulator or the government should have looked at it differently in terms of, fixing fixing the ecosystem, or, I mean, that's one approach of start of launching a COVID health insurance. But we saw there were many companies who said we won't cover the PPE kit, for example. Those consumable won't be covered. So regulator came up with a new product. Do you think that it could have been handled differently?
Yes, of course, it could have been handled very differently. One is communication to the customers that exactly I spoke about. The other fact is that should be clear representation, which one must have done by the insurer to the government in terms of how to take it forward. That's my view. Other than that, obviously, it's something which is I have a limitation in terms of a distributor to go ahead and influence out in terms of why the claims are not paid. But yes, customers have gone through these pains during the COVID hospitalization.
Okay. What about you? What do you think, Mr. Datta? I
Yes,
mean,
I
being
think
an insurer.
yeah. So let's look at it both ways. While it has built awareness, it's also taught us a lot of things in terms of what the rest of the panelists have talked. In handling complexity and making it simple for the customer. It's an abject a kind of lesson in how we need to handle complexity and make it very simple for the customer. And that's where I think of course it caught all of us by surprise, and we kind of uh, in a sense reacted. But if you really look at it, as a industry, we have tried to do something on this behalf. Apart from launching a specific policy, something on the cost front. We've tried to come together. This is the first time in the industry we came together as an industry and tried to publish a kind of a referral rate or a ready reckoner. We said that this is what we would like to pay the hospitals this is what we would like to pay in terms of per diem kind of prices, and what for COVID and all that. Of course, we've caveated with the fact that each state, each at every local levels, the government is coming out with a lot of rates, in terms of, because it's an epidemic, they were trying to build in certain elements of rate capping, if I would put that word, which would make sure that treatment is given to customers, both insured and uninsured, at a certain rate, so that relief is provided for people who are not able, not who want to access private care because it was not sufficient. These were extraordinary times, and we needed to react. So we learned a lot from this particular process. Of course, we could have handled it much easier if we really foresaw this. But now I think we are wiser. I think it's given us huge amount of awareness, or not awareness, of the learnings and how to handle the complexity and move it forward. That's one part. Also, the whole realization as payers, we have a lot of responsibility of trying to fix things which make it simple for the policyholder in terms of what we declared so-called usual and customary rates, which fluctuates a lot, amongst hospital to hospital. Our ability to be able to go and try to reason with them and try to come out with some things which are reasonable, because the whole attempt at reasonability is nothing to do with just an individual policyholder. We are all upholders of a fund which has to be sustainable. Our attempt was, there's a lot of interaction with the providers that COVID, you pay for COVID claims, non-COVID claims are not coming. It was not about that. It was about making sure that it's an extraordinary situation. We have limited funds at our at our thing. We need to make sure that, like everyone said, we have to cover everyone. Pandemic, there was a whole issue of who was covered, not covered. We went ahead and as an industry launched a product. For that, we have limited funds. So we needed to make sure that it is charged at rates which are reasonable. And finally, at the end of the day, we have to make sure that if the experience is good in this whole process, only then will the customer have trust. If he's going to feel that he's bought a product which is short-staged him, and the hospital experience was bad, he was flung between us, the devil and deep sea, as they call it, then obviously it's not going to work. So this was an important learning. I think it's my limited point is we've learned out of this. The payer industry has learned, the provider industry has learned, and that is where I think talk about what Bhabatosh is talking about, that we've started coming together much more strongly now, and we make sure that we, at least for some things like this, it is never repeated. We react very fast, and we make sure the process is well driven in terms of what is going to be paid for, and between us and the provider, so the customer is very much aware. He's not left in the lurch, is what my thought on this.
This approach of standardization of rates have been around for a long time among insurers. So just wanted to know, how is this any different than the attempt which all the insurers have been making for a long time to standardize rates of treatment across different companies? Because I don't know, for many years I've been listening to it, making a depository or coming together and standardizing. So how is this any different, or will we see more insurers going forward and having this approach by GIC of standardizing the rates?
Others would like to pick it or personally, I personally feel this is one area where we've gotten together as an industry. How much we achieve and how what areas we achieve. The starting point is COVID, and I think it's an important starting point. And we could take this forward in terms of doing two things. It's not about standardizing everything in the healthcare space. There will be issues like cyber knife and all that which we talked about. The whole idea is not to standard. We standardize things where standardization can help in limiting things which are very, very standard in nature. Consumables, medical testing, where things like PP, because why should there be variability around that? Testing, charges, all those things which can bring down the anxiety on the small element, but which leave a lot to be desired in the way it is, kind of variable, is where we live. There will be variation around big charges, and that's what and it will never get standardized to the extent possible. But the small ones is what we are attempting to do. On the small ones, we get a lot of agreement amongst us, so that the small charges, but a routine gets done every day. Gets kind of routinely done. That's one part which is coming out from this level. Others can follow.
Okay, and
if I can just pitch in, in the sense, I have a much better report card for the insurance industry during COVID. Partly because I'm part of the industry, but if you see in terms of, let's say, automobile manufacturers could shut down production, or I bought a laptop, the service center doesn't service, 4 days a week, and I've taken a laptop, took 1.5 months, it's still not back. In insurance industry during the pandemic, actually we've been given tighter deadlines to settle claims, and industry responded even before that. Even after that, I said we are doing, let's say, we're settling faster than during pre-COVID times. Secondly, in terms of the whole issue of initially there were some issues with providers, because a lot of providers wanted to charge much higher than what's the agreed tariff, because I said non-COVID patients weren't there. The treatment costs were dramatically different because of PPE kits, more nursing charges, more shifts of staff and all that. But having said that, after the initial phase, I think currently, what we've 7,000 crores worth of claims, nearly 5 lakh claims have come in the industry, which is not small by any stretch. 7,000, 5 lakh claims is a lot for one pandemic. 7,500 and average claims of nearly a lakh plus. So yes, there were some operational issues, but I think the way the industry reacted subsequently, I would give it a reasonably good report card. We don't get good press, but the reality is during COVID, I think no insurer would have dropped service standards, call center, claim settlement times, any such thing. In fact, people started accepting digital claims, on WhatsApp, which wasn't the norm earlier. So generally, insurance industry does respond to a lot of these things, even before the regulator steps in. A lot of the regulatory interventions are actually industry suggested. For example, exclusion standardization was a work done by the insurance industry as part of CAFE committees. The health regulation 2013 or 16 was work done by the industry in various forums and given to the regulator, which got adapted into the. It's not as the regulator is beating us to fall on track. These are things voluntarily taken by the industry, engaging with multiple partners, and that going back to the regulation per se. But having said that, the issue with hospitals will never go away. That's the point you need to understand is, it will become more complex to start with. But again, some of us regularly, weekly have calls with the hospital industry to deal with issues. I think the engagement will only get mature. As Sanjay sir also said, the complexity isn't going to go away, except that the complexity will be absorbed by us and the hospitals, leaving the customer out of it. So that's the thing we need to achieve. Whatever arguments, complexity, negotiations, and all the things that have to be done, either have to be done with the provider, us, through technology, through new technology tools, and make it simple for the customer. He doesn't need to know, except for the fact good has been done to him. Nothing bad has happened to him. If you can create that environment, that will be an achievement. As I said, I give a positive, my report card will be positive for the industry. I don't have such, probably because I'm part of the industry, but I don't.
Okay, we have about 10-12 minutes left. So I have a very a question which I think is very prominent, and I get to hear a lot about it often. We have seen health insurance premiums jump up between, on an average, 40 to 70, but I've heard cases of 100% jump also. So just for the benefit of our viewers and consumer at large, just wanted to understand that, is this largely because of rationalization of policy wording, standardization of them, and the IRDA undertook exclusion standardization. So just wanted to understand, the jump that we saw is because of all these factors, or was it something more? And so maybe Mr. Rudraraju, you can take that, and then we'll go to one of the next panelists.
In terms of premiums going up, the unjustified increases are not feasible because there's a regulatory control over pricing. So if I go back to the regulator and say I'm going to triple my price, one, that will not go through because you have to justify the price you're charging. So as long as that works, no insurer will charge unreasonably or will make extraordinarily profit out of insurance. Sanjay sir earlier said, loss ratios are 80% across the industry. So it's not as if price increases are too high. The underlying factors, as Dr. Bhabatosh earlier mentioned, introduction of technology, new treatments would remain the major driver for increase in average claim size, and hence, increase in premiums. The health inflation, we hear it's twice of regular inflation. During COVID, it's been the worst ever in my 20-year career. But ignoring this phase, the underlying increase in health costs will determine how much premiums increase. Also, in some cases, insurers, the strict risk selection they do or they don't do also affects the pool you're insuring. So if you have bad underwriting controls, the pool will end up suffering by paying as a whole. So if you allow sick people to come in without regulating or without adequately underwriting, so healthier guys also tend to pay more. So it's multiple factors, but the primary cost I would assume is the underlying healthcare costs increasing, and they've been increasing with dramatic level for the last few years. Cybernet is one small example, but otherwise across board, you see new technology, treatments, corporate hospitals aggregating. So that's the major reason, because at the end of the day, we don't, as I said, we pay hospital bills and we keep a small margin. We don't, it's not like the 20% loss ratio product or something. As industry, we pay out majority of the premium we get, and any increase is because of underlying cost increase. Of course, you can always quote an example of some insurer who's priced the product wrongly and had to correct midway and things like those. But there's a regulatory control around pricing, which will ensure customer will never be overcharged.
Yeah. So Rajagopal, just to interrupt, you're right about that there is regulatory control and all of that. But from a customer lens, the price increase is very abrupt, and it can happen on two accounts. One is, of course, the medical inflation that you have to account for, claims ratio going south, all of that. The other is also about this premium band pricing, where the premiums are, there is an age band. So 30 to 35 is one premium, 36 to 40 is another. And then there is a jump of 20% between these two bands. So the hike could be on many levels. The problem really is transparency and how it's communicated to the customer. So I'm wearing the consumer lens and I'm saying that, is there a global comparison that you can look at, which looks at some sort of a healthcare index or an inflation index and pegs the premium to, let's say, that index? Are there any global practices outside, and can India adopt any of those? Himanshu, you want to take this question?
Well, see, Dipti, let me answer the question that is this hike in premium of 40% or I haven't heard it so far. But then what regulator has mandated all insurance companies premium revision on the rationalization of exclusions. It cannot go beyond 5% on certification basis. So, but whatever premium are being revised today, it is largely, as Raja also mentioned, that it is largely on account of the inflation in the health sector, which happens, which is close to about 10-12%. I would attribute this hike in premium to the health inflation, and then there is a lot of innovation which is happening in the product. A lot of modern surgeries are being covered. So,
Sure.
If coverage is
Himanshu,
expanding.
actually, yeah, no. See, my question is more from a consumer lens. I'm saying that this is happening at your end, right? It's happening at your pricing end, where you're looking at modern technology, you're looking at inflation, you're looking at your claims ratio, all of that. As a customer, when I get a renewal notice which gives me a bump of 30 to 40%, I begin to wonder why. So my question really is there a transparent index elsewhere in the world, and can India adopt such practices, or is there a different way of looking at pricing? Because from a customer standpoint, I don't know why this 40% hike happened.
Well, I do not have an exact information on that, but let me tell you, if you compare the health insurance premium, what we charge in India as to globally, we charge just about 3.5 to 5% of the sum insured, which I think is the cheapest in the world if we compare it with all the world together. But then I think the health insurance premium that we currently charge is the lowest. Yes, as you rightly pointed out, then there are sometimes a steep hike in the premium because of the age band change. But that age band pricing is also arrived at basis, the loss ratios that the insurance company has experienced over the years. And as an insurance company, we cannot go back to the regulator. We have an option to go back to the regulator every year, but traditionally what we've seen is, insurance companies on an average revise their premium just about 3 to 5 years on average.
Okay. Bhabatosh, do you want to come in on this and just in maybe 30 seconds attempt an answer, because we're running out of time. We just have 5 minutes more.
Sure. I think any premium increase to the tune of 40-70% is a bad management of portfolio by the insurer. And I don't have any other response to that, because anything that warrants, and having everybody said that there is a regulatory
What happens globally? Is there an index? Is there an index?
Approval. Globally, such indexes are not used as much. We in India did propose as an industry to use, let's say, a certain markup on CPI for an automatic adjustment, but that I don't think works out that way. Yeah. So I think it's not as much about using an index to correct. An index to correct would be an annual, but then there would be some guiding principles. If my loss ratio is 50%, even if there is an inflation every year of a 7%, why do I need to correct my premium every year? So it's not as simple as referring to an index and correcting it, taking away the regulator's role. The question you asked is about it from a consumer point of view. 40-70% premium increase comes as a shock. Now, the age band part is fairly explainable, because that's 20%, not even 20% a lot of times, but it's an average. He's going to pay 20% extra, but he's going to pay 20% extra for a fair, another age band as long as continues, let's say, or premium is not revised as long as that is there. The fundamental issue is, I think, sharp premium increases and a customer's perception and impact on customer. That's the point we are making. Any sharp increase in excess of 40-60% is a poor management of portfolio by the insurer. You get to revise your premium only when your portfolio loss ratio is becoming something which is not sustainable, and you can't make at least a little margin on that, right? Either you have waited too long, but even when you hit that threshold, in an example, let's say that threshold is, let's say, 65%, just for example, right? But you are not going to correct it for the next 10 years. If the inflation is 10-11%, you are looking at a 2-year, 3-year horizon, you are going to correct it, let's say 20-25% at the most, right? So 40-60%, I think nothing but insurer having not managed the portfolio well.
Okay. I will have to stop here because we are just we're pretty much out of time. But I have a very interesting question, and I would like to end this discussion with that question. Each one of you, why don't you take us through your health insurance portfolio? Tell us what you have in your health insurance bucket, and also your quick handy tips in terms of building a cost-effective health insurance. You have a gamut of products from indemnity to floater to top-ups to defined benefits, critical illnesses. What would you recommend a customer? How should that customer go about stitching a health insurance portfolio? So 2 questions here. One is, what's your health insurance portfolio like, and what's your recommendation? And I'm going to start with Himanshu.
See, the first and foremost thing is start early in life, maybe as soon as you start earning, because that's a time when you are in the pink of health. And, talking specifically about starter insurance, so we have a wide range of products which is suitable for an individual, for a family, for a youngster who's planning to start a family, even for a senior citizen, which is considered to be neglected risk in the industry. And we have a lot of disease-specific products wherein uh, a risk which is otherwise considered to be, not underwritten. For example, somebody who's on insulin or somebody who's undergone a bypass surgery, we cover all of that. So I think, and another important part is that one must cover all the family members, especially the parents, because they are more likely to need hospitalization. And there are quite a few products, as I mentioned. We have a specific product for senior citizens. So that's my take on
What's
this.
your health portfolio like? What's your health portfolio like? What policies do you have, if you don't mind sharing, that is?
Yeah, like your personal one, we would like to hear it from the horse's mouth.
Okay, so I have a comprehensive health insurance cover for my family. I have a separate cover for my parents, and this is not something which I get from my employer. These are my personal health policies that I have bought. Apart from that, I have a critical illness cover and a personal accident cover. This is on
Great.
the GI side. On the life side also, I have a cover.
Great. Mr. Rath, you want to go next?
Yeah, very interesting one. So I'll talk about myself first. What is that I have? So I have gotten employer cover that has been provided to me. That's there, and simultaneously I have another cover that is there's a floater cover that I have my family for about 15 odd lakhs. Plus, I have got a top up plan which is up to 25 lakhs. So putting together top up and a base cover, I get about some 40 odd lakhs of cover that I get. Plus, I've got a hospital cash benefit that I've taken for myself in case there are leakages out during the claim processes because of exclusions on something. Just the benefit product is going to help in terms of generating that money for me to pay off those expenses. And an overarching critical illness cover that I have for me to substitute my income loss in case I'm critically unwell going tomorrow. Um, See, this question is very interesting, Dipti. So, what is that I could recommend in generic to consumers about health insurance is something which is I have bought it for myself, honestly speaking, and everyone would like to go for that. So, one should
Sure.
have a base cover, a normal basic minimum cover of 15, 20 lakhs, whatever is required for them to buy, plus a top up. Rather buying a huge amount of cover for a crore or 75 lakhs of cover, paying humongous amount of premium towards that doesn't make any sense, right? So that's one. Second is obviously should have hospital cash because exclusions will keep on coming at, even if regulators have come and given cut the exclusions clauses to about 50% now. Even then there are exclusions that will apply and there will be leakages out, right? So the
Sure.
benefit product is going to help the consumers to actually have that, plus an overall overarching critical illness benefit that has to be there in everyone's portfolio for sure. When one takes the cover, which is a floater cover that I'm talking about, ensure that you have a restoration benefit to that also, because that will definitely help the family members in case I have exhausted the sum assured. Then obviously through restoration, that sum assured can restore again to take it forward. That's a recommendation I would like to go for a generic one. But if I go a little bit of specific, if you allow me one more time to actually explain to you, for an for everyone in the panel right now, I have one thing that came to my mind, and I keep on talking about that. Everyone has got covers that is provided by our employees, right? And one buys another policy over and above their employer, keeping in mind that obviously if I'm going to retire, this policy is going to work for me. And simultaneously also, if I want to change my job, for example, so within the change of job, I have to have a cover that should continue for me, right? So the concept that came to our mind and which we have co-created in DBS today is something which is a switch on switch off kind of top up plan. So how the plan works very interesting is, supposingly I'm into employment right now and I decide to actually move out and take a sabbatical for about 6 months, and during the sabbatical period I can switch on that particular top up product to a full cover. And when I join back the employment, then obviously I can switch it off as a top up plan and have my employer cover as a base cover and top up to work on that. That's something
Okay.
which is we have worked very closely with our insurance partners and we are offering that to customers. Whereas to look from that standpoint, what consumers are actually looking at and pitching the right product as per the need of the customer, that's very
Okay.
crucial.
So I'm going to move to Rajagopal now. Your recommendation and your personal product portfolio.
I'll start with the recommendation. It's not what I say will not suit the industry. Uh, let's say the first product I would advise somebody who has regular employment and employer provides a cover actually is the topper. Because the first rupee cover is more expensive, and normally, let's say a claim of 10-20,000 you could pay out of pocket. It's the big
That's right.
claims which are a problem. So if I were to recommend, I recommend all my friends to actually take a reasonable top up with a deductible they can pay out of pocket. Let's say I can afford to pay 2 lakh rupees if there's a claim. I generally say take a 2 lakh deductible and take the largest cover you can afford, because it's those rare large value claims that don't make your financials more than the 10,000 rupee claim. A claim for gastroenteritis is not going to hurt your finances. You could have, so I would say the first product, if ever, which I have, is a top up. So in case A large claim comes, I'm protected.
Okay.
If you're not
What?
employed anywhere and if an employer doesn't offer a cover or offers a cover which is very restrictive, then the first product to buy is the base cover to start with. It depends on what your situation is, but you should take a large top up, and as I said, the largest top up you could afford to buy with a deductible large enough which you can afford to pay without financially not suffering the consequences.
Sure.
Employer and CIs, disease specific, some of these are generally complementary products. They cannot be the primary products in your portfolio.
Sure.
I would say primary should be either a top up or a indemnity thing.
Great.
And for
What's
the
your portfolio?
I said I have a TA and apart, term insurance apart, I have a top up product which with a deductible, as I said, I can afford to pay out of pocket, or my wife also works. So between us, we have a large corporate cover, and the top up is large enough for me to not worry about a reasonably large claim. So if I have if it's 50 lakh, 70 lakh top up with a 2-3 lakh deductible, you are reasonably safe from large events. Of course, indemnity products are the largest for self-employed because you don't have any other
I'm
cover.
going to move on to the next because we're running fashionably out of time now. Bhabatosh, very quickly, your recommendation and your personal portfolio. 30 seconds. We should wrap this up.
So quickly, every industry goes through 3 phases. First is distribution. You don't need to have great products to achieve scale. Second comes the product-led growth. And third comes the brand-led growth. Currently, health insurance and insurance in general is between the distribution-led growth and product-led growth. In that phase, I wouldn't go to the recommendation of what to buy. First of all, buy. We started with penetration being low. So whatever you can buy a health insurance product first, right? And you look at whom to buy it from and which criteria you should consider, whether payability factors, settlement ratios, brand, trust, etc. is one part. Personally, for me, I have an indemnity, which I think is large enough at 25-30 lakhs. I have a top-up and I have a term life cover. I don't think I need more than that. And I'm not going to disclose my sum insured on term life because
That's perfectly fine. That's perfectly fine. And we're going to end with Sanjay now. Sanjay, very quickly, your recommendation and your portfolio.
So you're on mute.
I just wanted to quickly say that I would not repeat the kind of recommendations which I think all the panelists have covered. So I will just come to my personal wish list, which I will place before the industry panelists here. So I would like to have 3 things, as I go forward. One is it's not about the product, and as in the long term, I worry about every consumer should be able to buy the product, as he grows old or as he runs out of income. And so I would like to ask for 3 things. Can you create a product? I think I'm asking the regulator every 1 year, a health savings account, led product. I think we need it in our country, and it could be tax deductible and all, something which allows me to plan my out of pocket payments, my premiums, going forward, and all of that. That's what I need from my colleagues here. The second one, and can you give me something where something which came out in a country which didn't run, but it was conceptually for a person as a consumer. I would like a single premium where I'm covered for 10 years or something like that, long-term kind of thing. Again, a regulatory issue. It was called Bhavishya Arogya, for example, but from a consumer point of view, it's very complex at the back end. So I'll not talk. So I'm just talking as a consumer. I would like to have a product where I'm able to pay ahead. I'm going to retire or I'm going to do something. Can I just pay for 10 years of coverage? And the third thing is something which I worry about, but that's something which, while critical illness does take care of some part of it, but the point is that we don't have any, we are not planning for a long-term care kind of product or anything like that. It's a very difficult one, but we need support. On there's a lot of expenses on healthcare which comes, will come through the home front. Where you are a chronic patient, you are a guy, a paraplegic, or you would need care, on a long-term basis. So some products to be able to pay for that, which is a chronic need for a customer. It doesn't get paid for normal regular indemnity policies. These are 3 things I'm just putting as a wish list, before the the just to be different from what they've already.
The idea of a health savings is quite interesting, but we don't have time to sort of discuss that out further. I'm going to end the panel discussion here. Thank you so much for such an engaging conversation, lots of insights. And I think for our customers, as for our viewers, there's a clear-cut takeaway, which is buy an indemnity product with a huge super top-up cover. That's the most cost-effective way of buying health insurance. And then, of course, look at your additional defined benefit policies like your critical illness plans, etc. Thanks a lot, panelists.
Thank
Thank
you.
you.
Thank you.
Thank you.
Thank you.
Thank you, Aditi. Thank you.